Hi, thanks for joining me on my market report. My name is Mike, and my market report is on mortgage rates. We go in every day talking about mortgage rates, what's driving them and impacting them. Sometimes it comes from economic calendar, sometimes it comes from headline news or geopolitical, sometimes a combination. But also, sometimes good news becomes bad news, and that market sentiment changes. And if you're watching this, you may not understand what's going on here. So we're here to try to explain these items here for you to hopefully give you a better understanding, especially for those who like to follow mortgage rates. A little bit about myself is I am a loan officer. I do work with the national lender. We do loans in all 50 states. So we'd love to be able to help you out with your refinance or purchase needs. But not only that, we would like to be your resource. So please feel free to reach out to us and ask any questions you might have, whether it might be something as simple as mortgage rates or programs out there, or if you got something else out there, we'll be more than happy to get that information for you. Look, again, so without further ado, we'll just jump right into it. We'll start off with the economic calendar today. Something I kind of like to look at, but don't exactly. There's no weight in the market. But every Wednesday we get these reports from the MBA, which is the Mortgage Activity Loan Activity Report, and it kind of gives us a gauge if loan applications are up or down. So with the purchases, as we see from week to week, dropped, and then we also see a increase of the refinance. So we had a slight improvement with our rates, and we saw improvement with our a little uptick in terms of rates, or not by a lot, but a slight uptick in the refinance here. Now this one kind of gets me. I think this is pretty insane here. Now ADP, we're getting this week we get the jobs data, and we always start out with the private jobs payroll for on Wednesday by ADP, and then tomorrow we'll get the uh, I'm sorry, the weekly report, which is the weekly jobless claims, and then Friday BLS or Bureau of Labor Statistics will provide their jobs, non-farm payrolls, and unemployment rate, and of course that will be the big one. But today we got the ADP brought out their numbers here, but get this: last month when they did that back in January, for February, they had a loss of 301,000. The markets panicked on that because they thought the BLS would come in even worse, so they had a huge impact on the market. Now it was reported at 301,000, but now it got revised higher to 509,000. That's 810,000. Huge discrepancy. I just don't get how, or 808,000 discrepancy. I don't understand how you can have that big of a miss in there, but so whatever. But that was revised much higher here. Now, forecast for coming for February was 388,000. It came in much higher at 475,000. So, better numbers here. But again, this doesn't have a lot of weight, but it did kind of spook the markets last month. So sometimes it will give the market some indications of what's to come, and we didn't get that last time. So that was kind of a good reminder. But again, this revision here is to me is kind of serious. But and then also today we got Paul. He's meeting before Congress. He's got a 2-day meeting before Congress. And what did we learn? He understands the Ukraine situation going on, but we do need to take action with the high inflation. It's not as transitory as they had thought a year ago. Um, they do feel that, but he did kind of lay out the one uncertainty that's been driving the market crazy about the rate hike coming up in March, which will be they start the meeting on the 16th of this month, and it looks like it'll be a quarter basis point. So he kind of resolved that one. So I think the market's kind of eased up on that, and as a result, stock market is coming making it back. They're taking a break from the flight to safety that we were experiencing the last 2 days with the Russia-Ukraine war to go ahead and feel a little bit more optimistic about some things that the Fed's taking action here. And of course, we're losing money here in mortgage-backed securities, as you can see here. We're down. We're currently at 67 basis points. We were down like 70 earlier here. So yesterday was a good day. We had a little uncertainty with the wicks here on both sides here, but we did close up, I think, around 40, a little over 40 basis points. So still a good day. However, today it's the markets are taking a little bit of a break and a bit of a sell-off coming here in mortgage-backed securities. Now, one of the competitors to mortgage-backed securities we've been seeing a lot more of, and is creating a little bit of competition, is the corporate bonds. Those are up, and so investors are not only may not be buying this, they may be buying more corporate bonds, and those are the things that we're kind of running into. Um, Also, on the supply side, supply and demand here. So, so they're taking a little bit more of corporate bonds in that scenario here. And here's the today's volatility. So as you can see, we went up slightly and we went down, and we've been kind of in the sideways pattern for the most part here for the last several hours. So a big sell-off right around 6:30 roughly, around 6:30ish. It started selling off dramatically down here. And since we hit the pretty much kind of towards the lows, we've been pretty much on a sideways pattern here. And we'll kind of wait and see how it translates throughout the day because we've got a lot of things going on. We do got other Fed members speaking today, but of course Powell's comments have the most weight as he is the chair. Uh, and then here's yields. Yields dramatically jumped up back upwards after yesterday, moving back above the 50-day moving average and go up to the next technical level. Right now we're up about 1.84 right now. All right. So that's pretty much the wrap. And what does that mean? Rates did go up. Rates worsened a bit here. So, but one last thing we'll touch on is the average rate for a conforming loan limit. 30-year fix is now at 3.9, so it dipped under 4%, and 15 years at 3.25. So if you remember, if you've been watching my videos, they've been up over 4% for over a week here, and now they just dipped below. Now today it could be borderline. We'll wait and see. But again, those are good things. They do have points built into these rates. Then here they are just the national average on the conforming loan limit here. All right, folks, we greatly appreciate you guys watching us. If you guys like these videos, please smash that like button and share. We greatly appreciate your assistance in helping us out to spread our channel out there. And again, if you guys got questions, please feel free to reach out to us. We'd love to be able to talk to you guys. You guys have a great rest of the day. Thanks so much for watching, and we'll look forward to seeing you guys in tomorrow's video. Bye-bye.